So good morning to everybody. I can say good morning because I'm in New York and I am addressing an audience of attendees from all over the world. So thank you very much for joining us today, the second day of our forum. The first panel of the day is on LPG shipping. We have with us the CEOs of 4 major companies and Jorgen Lian from DNB Markets, who is going to moderate it. I will be very brief again, even though we all crave the moment that we will all get together physically, still modern technology affords us to get together on a global scale. We have people now, panelists who are together from all over the world and addressing again a global audience. Jorgen, please take over. And again, thank you to John, Anders, Jens, and Harry for being with us.
All right, thank you very much, Niklas. So you made the introductions more or less and joined with 4 important people in terms of the LPG shipping sector today. We're going to hopefully discuss quite a few interesting topics regarding to that. So just to set the backdrop here, you've recently had many segments that have been more or less in the doldrums following the pandemic. And one segment in particular, I think, has sailed through seemingly unscathed. That has been the LPG space. Though rates did come off in the beginning of the year, they have rebounded nicely as the markets seem to be at the balancing point. Healthy demand and attractive price arbitrage to Asia are driving long-haul export volumes out of the US, where LPG stocks are at record high levels and production is holding up surprisingly well, despite the oil and gas activity levels declining. So this translates to healthy earnings for the companies, but seemingly the stock markets are not taking the bait and continue to price the companies at steep discounts to underlying values. So let's try to figure out what's going on. And with that, I think we'll start tackling the first part of the first topic of today's panel, and that would be the US production side of things, which has really been something that's driving volumes and demand for vessels. Activity level in the oil and gas space in the US is considerably down following COVID-19. But production of NGLs and LPG continues to be strong. So it's an open question, I think, to all panelists, why this is and what's your thought around the production numbers coming out of the US? Are they sustainable?
Who would you like to take this first?
I think you can start, John.
I can start, yes. I will start then with the production. Well, it continues to be stronger than expected for many reasons, and I think that we have seen elimination of processing and transportation constraints in the chain. So there have been, large NGL extraction from the gas stream this year, and the infrastructure generally has increased. We have seen additional fractionation capacity being put online, which is significant, and we have seen other projects completing expansion in the export facilities, and also expansions in pipelines. So as a result, that has helped significantly in the logistics of the product, the NGL. And then at the same time, we have seen the gas pricing, because inventories have been high, we have seen the gas pricing remain stable to weaker than crude, and therefore that has helped the opportunity for buying the product, the NGL products. And generally, I think that maybe the analysis is a little bit bearish, having been given a big blow in so many other sectors. People expected that this should have been impacted as well. It has not. As you know, NGLs are a product of not only crude distillation, but also natural gas distillation. So I feel that we are in a good position for all these reasons that I mentioned.
Yeah. So is it primarily connected to infrastructure improving, or because you'd imagine
As I
that
said,
the
it's
activity levels
infrastructure that is improved, export capacity that is improved, and also pricing and abundance of the product that has made it attractive to places in the Far East.
You know, although drilling is substantially down this year, already drilled wells is still producing, and that's why the supply has kept up reasonably well the way we see it.
Yeah, so we see it exactly the same. I think production, especially out of some of the fields in the States, is stabilized, and hopefully it will go in the right direction, further upwards, as we go through the year and into next year.
Yeah. If you have anything to add on this?
No, I think it's been covered. I mean, I think again, you know, it's much higher gas to oil ratio in the wells, and so that I think is contributing and keeping production well, you know, flowing well.
Exactly. I think that's quite interesting. And then with that as a backdrop, considering, you know, the outlook for production going forward with expectations of both oil and gas prices to go upward, especially I think gas prices in the US have started to tighten. How is that going to affect activity levels? And will that then to some degree negatively affect the oil to gas ratios?
We don't think so. We think we will continue to see, you know, good ratios there. So, but obviously it's you know, where that point is, you know, we're not quite sure about. But I think we're not that concerned about, you know, slightly higher prices.
But I think we need a higher oil price to see some more drilling again. Otherwise, there will be less gas available. So, you know, I think that it's not a negative thing, that's for sure, if the oil price increases comes up again.
Mm. And if it stays at around these levels, would you what impact would that have for, let's say, you know, the forward price for 2021? What do you think that translates to in production out of the US in NGLs and LPG?
The predictions I have seen, at least, is for a slightly reduced production next year.
That's right. It has been, they expect a 6 to 8% decline in production. That's the consensus of the analysts. However, we think they are a little bit bearish, and there could be a surprise on the upside. And that's where we think things stand right now. So it's difficult to say, but you know.
I think we are not too far away from the point where we will see at least decent drilling activity. I don't think we need, you know, we don't need another you know, $10 to get there. So I think we're not too far away from the point where, I mean, there's, you know, technology is improving and efficiency improving. So we're not far away, I think, from the level that's we should see some stability. So I agree. I think perhaps there's the estimates may be a little bit conservative for next year.
Yeah, John touched on the export capacity side with some expansions coming on. I know you guys in Navigator, Harry, are within the export side and the facilities there. Is there any constraints at the moment, both for US LPG exports, you think, on terms of the export side? And what about more the petchems, where you're more exposed?
Yeah, certainly on the petchem side, there's been a couple of bumps in the road recently, you know, with the various hurricanes that came along, shutting 25% of capacity for ethylene. So there's been a few bumps in the road there, but you know, capacity is available. Our terminal in Houston has been available throughout, regardless of the hurricanes, and we've now moved over 300,000 tons of ethylene so far this year from that terminal. And obviously our capacity is about 500,000, but towards the end of the year, we'll be expanding that to over 1 million tons. So I think the capacity is there, and people are actually pricing the petchems, especially the ethylene, to move, which is good news. And it's also helped by the fact that the arbitrage is back in healthy territory again, particularly for ethylene, going from the United States out to Asia. You know, we've seen healthy arbs of what, 350, 360, 370 recently, which helped drive demand.
Yeah, we'll get a bit back to the demand side, but you mentioned the hurricanes, and I think that's interesting. In terms of vessels and the shipping markets, how do they impact the balance? Are they positive in some degree, or is it more of a negative in terms of production shut-ins and so on?
Well, I guess it depends on. I guess it depends on the sector, doesn't it? But certainly, if you don't have the ethylene, or the ethylene arbitrage is reduced dramatically in the States, or your domestic market price spikes, that means that more ethylene is going to stay in the continent and not be exported. So that's not particularly great news for us in the petchem sector. So
I'd imagine I'd imagine it translates to some congestion and inefficiencies as well. I don't know.
Definitely, yeah, because you've got to shelter the vessels.
Yeah.
Yeah.
All right.
We've seen congestion in both Houston area, of course, because of all these storms that have been hitting, record storms this year, and also we've seen delays in Panama, which is caused generally by the COVID issues and trying to get capacity of vessels going through the canal.
Yeah.
Probably
I guess sorry.
Okay, probably being the newest in shipping here, I mean, I clearly have learned that, you know, these inefficiencies, they are not always that bad for us, and I think I think that's clearly been you know, affecting our shipping market positively.
Yeah, I think that's important to note that you know, these small things, they help us. It doesn't take much to give us a little bit of a tailwind.
Yeah. So we'll get a bit back to how the freight rates have developed and such, but then back to the demand side. As you mentioned, there's been a healthy ARB for exports of these products, but you've had a mixed picture, I think, in Asia, where China is down year to date 10% year on year, I think. Korea and India, on the other hand, are up quite dramatically. China, they have a political push to switch from LPG over to gas, which could be a negative and such. While Korea and India, they have incentives the other way to increase a lot of LPG production or consumption, I mean. So how do you view the current situation of demand in Asia and that developing going forward? How stable is sort of the consumption levels that you've seen, especially maybe for Korea and India this year? If you'd like to answer that, Anders, start off with.
I think we've seen very, very healthy demand numbers from India and South Korea. I think so clearly that is offset, you know, the softening in China. And clearly it's been mostly retail driven, and of course the fact that we also seen, you know, less domestic LPG production, you know, given the shut-ins of refineries and so forth. That's also clearly, you know, been a factor. But again, India has been very strong, and of course there we also have again congestion, which means that as you just learned, that doesn't hurt us too much either. So India's been very strong. We also earlier this year we also saw Brazil and other markets also you know, picking up some of the slack, you know, from China. So the demand side has been stable and good, and it looks like India's going to continue clearly, you know, with the local subsidies there. And you know, on this and LPG, I mean, LPG is good. It's a good product for India and those markets. So I think that we'll continue to see good numbers from there.
Then yeah, go ahead if you had something to add.
No, I couldn't agree more. India may overtake actually China in residential sector demand because of that implementation by the government with subsidies and trying to clean up their environmental and health concerns that they have. And I think they're doing a very good job in achieving that. So I couldn't agree more with Anders.
And then another factor I think that's quite important here is the exports out of the Middle East, which are impacted by OPEC's discipline on production to some degree. That's pushing more long-haul cargoes, specifically maybe out of the US and to Asia, which is soaking up quite a bit of ton-mile capacity. But how is that impacting perhaps the more regional trades, Jens? Is that something that you're seeing? I guess it's an adverse effect to some degree.
Yeah, but our business is very different than the VLGC owner business, because we have a very high contract coverage, and we are seeing that our contractual partners, they continue to renew vessels, and the business looks quite stable. We've seen some contraction on the ammonia side this year due to the pandemic, but we also expect that to pick up again as we go forward. So we see a very stable market with increased demand for the mid-size ships, and what Harry said about the ethylene market is also very good news for us, because it means that his ships will not compete in our mid-size segment. So that's music in our ears.
Yeah, good. So part of the reason and explanation that we've been hearing a lot for the demand side, and that staying healthy despite maybe underlying demand not having at least the fundamental drivers, considering COVID and all, has been that the refineries have been running at lower utilization due to the demand for end products, and thereby also tightening supply of domestically produced LPGs. That's I believe been a case in Asia, which has driven to some degree the arbitrage to stay wide. But how is that outside of Asia? Do you see similar tendencies also affecting trade demand for the more regional routes in Europe, for instance, regarding this?
Yes, and this is a quite interesting thing, because the lower refinery runs or utilization has impacted on the smaller pressurized ships. And we have a few of these vessels, and especially in Europe, we've seen the market having collapsed almost. So and that's obviously then or potentially help the VLGCs to pick up that shortfall.
Yeah, I think that's a good point. Is that similar in terms of the petchems as well, Harry, for your trades?
Yeah, we've the other thing that you've got here, I guess, Jorgen, is the fact that some capacity starting up in China. So the satellite cracker capacity is commissioning at the moment, and we just did one of the first commissioning cargoes on the Navigator Nova there. So that's going to suck up quite a lot of ethane demand that just frankly wasn't there, just a couple of weeks ago, to be frank. So that all helps. So you've got some capacity starting up. Like Jens was saying, the handysize sector is a bit more stable, I think. We don't get the wild swings that maybe you get in some of the other segments, which helps us enormously.
What about if the refinery utilization then again picks up? Do you see that as a threat to the demand side picture here? I don't know if you want to answer, John.
Well, there could be, but I'm afraid that the United States Gulf is the main producer. They do have capacity to store, as we have seen. They have huge inventories of product, and it will price at a way to move the product. I think maybe they're running this year. There are so many reasons why they're running lower utilization. We started with COVID. We started with so many problems. The weather problems that we had, and so on. We see that the utilization is very elastic. It just moves around and makes the product available whenever it's needed. We have not seen cancellations yet, even though there has been discussion about cancellation of cargoes. We have not seen any yet. So we're optimistic here that the market manages to handle this situations as it goes on.
And I think, Jorgen, also, yes, that might have some effect, but we're also seeing, with some back to normal, PDH plants coming up the stream, and so we do see there'll be more demand also coming from there. And of course, again, repeating, the retail is still so important. So I don't think we're overly concerned, but obviously something we need to watch.
All right. So that covers some of the aspects on the demand side. We talked a bit about congestion factors, which are an important thing in shipping when it comes to tightening freight markets. And also discussed some of the fundamental side here. But how much of what's going on in the freight market the past few months would you say have been driven by strong fundamental factors compared to short-term disruptions? I'm thinking then specifically maybe about the hurricanes and congestion that's been seen in Panama and such. Are the rate levels we're seeing now reflective of the underlying market, or are there some disturbances here?
I mean, if you look at the arbitrage, I mean, it's I think you see quite a fundamental case for a strong market.
No, I agree with that. I think underlying fundamental is good, but there's no question we are being perhaps helped by there's disruptions. There's dry dockings clearly is something that's given us a positive, at least some positive tailwind from. So, but overall I agree. I think the fundamental market is, and we've seen that also before all these disruptions. We've seen that the market has been quite healthy. And so, we looking back, I mean, we had COVID, we had the oil price war, and I have to admit that I was much more nervous early in the year, looking ahead, thinking what the effect would be. So no, I think fundamentally okay, but yes, we are also experiencing disruptions, which clearly is perhaps boosting rates a little bit.
I think a lot of people would agree with you, Anders, that going into the year and seeing what was happening with COVID, I think people had a scare. But back to what you're saying, Jens, I agree. The pricing picture and the arbitrage, it seems to be open. But then the question is, why is that arbitrage open? Is there a limitation of vessels? And is that long-term or short-term? That's why I'm asking about the inefficiencies, because they can help in that respect from closing the arb. Or is this something that you see due to export capacity being constrained on the US side, which means that the price there is not interlinked with international markets? If you have any thoughts, Jens?
From my point of view, I think it is more the US domestic situation with the overhang of available product. I mean, the product availability, I guess, is record high, and that is driving the exports right now. And then as Anders pointed out or mentioned a little bit earlier, I mean, if we get a strong winter in the US, that may have some constraints on the export situation.
I guess because that's quite interesting. Looking at the latest weekly statistics from the EIA, it seems that demand actually is picking up quite considerably in the US. So what would be your view on that, John, on the demand coming back? Does it seem that way, and would that be a factor to consider for investors entering 2021?
I think the demand will come back. And we saw it this year, even though we got this huge setback with COVID-19, and we saw the market sink to terrible levels towards the second quarter. We've seen a very strong comeback in the third quarter, and we see this demand and interest in the product in this fourth quarter. So I think yes, we will continue to see better than expected markets, better than anticipated markets in the next year. Correct.
Yeah, don't know if anyone would like to add anything to that.
Yeah, I agree with that, because and that's what most of the analysts are saying now as well, that there will be certainly a recovery going forward, even if there's a second wave of COVID. It feels like things are recovering. And you mentioned the EIA data. The EIA data is positive on a lot of fronts, on exports, on production, and on US demand. So it's all pointing in the right direction. Now, will there be some bumps along the road? I'm sure there will be. But it feels like the sentiment is turning, and it feels like things are improving.
But clearly, again, if we see a strong and expected pickup in domestic demand, that will not help our shipping business. So we watch that, but it looks stable, and at these levels and expected levels, I think we'll still see good exports.
I think, the first half next year may be a little bit weaker, but second half next year and going forward, I'm also very optimistic on the LPG market in general.
Yeah, that would be my next question. The usual seasonality in the LPG space is often, or it has been historically strongest during the summer months and then come off somewhat during the winter. Is that something that's expected this year as well, or is this going to just push through into the high season in the summer?
This is a great question. I don't know whether we're going to see the seasonality happens every year in as much as the inventories are concerned. So the inventories are drawn down during wintertime. And it's just about now that wintertime is starting here in the northern United States, and we'll see it in other northern hemisphere countries, and we will see more demand for LPG during the season, the next 4 to 5 months until March. So it's to be seen. I mean, it has been following more or less that pattern for many years. We do not see why it would not happen that way, it is given in a way, more or less.
Is the current strength that you're seeing, is that incentivizing any orders at the moment, do you think? Are ship owners discussing with the yards? I read today that there was another order booked for some LPG fueled VLGCs coming in. Is this anything to fear in terms of the supply side? Are the yards very aggressive in marketing their slots for VLGCs? And it's also worth mentioning that a lot of the orders that have come in this year have been VLECs, so carrying ethylene. So that's, I guess, a positive in terms of volumes for your terminal, Harry.
Yeah.
But in terms of the ordering, are they aggressively contacting ship owners such as yourself if you want to start Anders?
Well, they always want to see. They always want to see us coming in and ordering new building. But I definitely think it's the wrong time for us to start ordering new ships. I think there's plenty of ships in the market, and I think we'll come back to that. But I think there's many things we can do to make our current fleet even more environmentally friendly. And so to me, it's and even though I know again many of our customers, they always try to entice us to give us some long-term contracts that I think at very, very low returns. And build new. I think it's the wrong time. I think we should definitely hold off now and see both what future technologies are available, and again, I think we have plenty of ships, certainly with the LPGs.
I agree with Anders, and I think that if we go forward, we will go with dual fuel ships for sure, because that's the only way to go forward. But there's so many other environmental and also fleet concerns that we believe that it's good to invest and put some more capex into your own fleet, upgrading your vessels, making sure that they will be able to trade in the future with an improved footprint environmentally. So it is a challenging time to make a decision of ordering a ship which will be able to trade past 2030 into 2040 and have a ship that will not be able to comply with the future regulations that are being anticipated right now.
Yeah, there's a lot of uncertainty there, and we can continue down that road and sort of on the same track as well. Jens, you've ordered some vessels, VLGCs on. What kind of pricing and what's necessary in order to see more orders come into the order book? And you've also opted to go for the dual fuel LPG engines.
As John said, I mean, if you want to order a ship today, you will order a dual fuel engine. I think you would be doing a major mistake if you didn't do that. Our ships were ordered against the contract to Equinor, so that was a specific requirement they had, and that was the same with the order you mentioned earlier on. So speculative orders, I think, will be limited going forward. the yards are obviously very hungry. If you look at the 3 major Korean yards, I think they have an average of around 20% of their intended orders so far this year. So they're obviously very hungry. But as ship owners, I think we will hold back because we don't know. It's hard to know what technology to go for. And seemingly the equity markets, and we'll talk about that, but they don't really value shipping these days in a very good way. I mean, if you look at the value to NAV, it's so new buildings is not the favorite from the equity markets either, I think.
Yeah, but you mentioned an important thing, and that's the interest from long-term charters in ordering new modern vessels. I think that's becoming an increasingly important part. And you touched on it as well, Anders, that some people are coming with tenders to order capacity. Is this going to be enticing for a lot of the owners?
Well, I can tell you it's not for us at the moment. We have made the big decision to convert 12 of our ships, and we think that when we have the first ship coming on water now, ready to first cargo pretty soon, we think that when our customers see that it's perfectly fine to convert a ship, they're talking about their environmental profile, and they want green ships. And those are the greener ships. They're greener than the new ships because the carbon footprint of a retrofit, it's 35 times less that of a new build. And I think that is something, and as John is saying, we can upgrade our fleet. I think more than half the fleet can actually upgrade to dual fuel, and that will both extend the life and you'll take away the risk of not being able to play, after 2030. So no, we will not build new.
BW has been pretty clear, so let's hope you stick to it. It would be interesting if the ship owners showed that discipline and you saw the markets tightening and staying where they are. I think that would be the first part in convincing investors that this is a place to be.
But have you ever seen ship owners having discipline?
That's exactly why I was. I think that's a fair point. So we can talk about it, but we'll have to look back and see if that turned out to be the truth. It's interesting.
To be fair, in the handysize sector, I think the building has been pretty disciplined over the past few years, even going forward into 2021, 2022. There's only a few ships on order that we know of, which is a small percentage of the total fleet. So I think in handysize it has been pretty disciplined.
Yeah.
But I think the good thing is that the uncertainty that surrounds us will limit the orders irrespectively.
Definitely.
Yeah, I agree. And but I would say the case that's made for using LPG as fuel, both as a BW with retrofitting LPG and you, Jens, at Exmar ordering 2 LPG propelled vessels, I think that's at least an indication which direction things might be going. But then, in contrast to maybe the tanker space or the dry bulk space, where you're not really carrying a commodity that's that easy to use for the propulsion technology as well. But you two have gone for the LPG solution, at least partly, and then John, you at Dorian, you've opted for the scrubber solution. So what's the rationale behind that? And is that something you're sticking to, or does converting to LPG seem like a more interesting path down the road, maybe?
Yes, absolutely. We were there from the beginning when we built our ships. We were very interested in dual fuel. We still are. We did consider it, and we will consider it as soon as it's attractively priced. Absolutely.
As an interesting side comment, I read today that the Japanese yard is now making a design for a Capesize with LPG dual fuel.
That's very interesting.
Yeah, I think this we should all actually make sure we're out there promoting the LPG as a fuel. I think it's actually LNG is getting too much attention, and I think LPG is a very good alternative for many segments. And yes. So hopefully we can show now over the next few years that this is actually a very, very good alternative also for other segments. And I think the main thing I think is that we LPG, at least it's a good step in the right direction, because obviously, we will have to go even further, and whether it's ammonia or if it's bio LPG, I don't know yet, but it's clearly something that we need to really focus on, and we're spending quite a bit of resources and time, trying to understand that.
And the last part of this, I think I'll give Harry the word if you'd like to discuss the. You opted for some LNG and ethylene fueled type engines as well, which is quite interesting.
Yeah, we did an ethane retrofit for one of our vessels that was, ploughing backwards and forwards with ethane under time charter, and that went pretty well, and it helped reduce emissions quite substantially compared to the normal fuel. We've got another slew of vessels that can run with LNG that we haven't always used, to be honest, in the past. But the majority of our strategy has been compliant fuels so far, because fitting the scrubbers didn't really make economic sense for us, given the size of our vessels and the journeys that we're making. And I guess our call was that commodities commoditize, so we assumed that the delta would start to get closer together going forward. So
yeah. So what's the reason for not using LNG?
Because at the very beginning, when we commissioned the vessels, there wasn't the availability of the product. So they just started up on our normal fuels.
Okay, how are the charters approaching you regarding this? We've been slightly touching on that in terms of new buildings, but are charters looking to book vessels at the moment? Do they put a lot of emphasis on these kinds of factors? What you're doing on, call it the ESG side of things? If you have a comment on that, Anders or John, on the VLGC side.
I mean, well, you're saying is customers or the shareholders?
Yeah, your charters to start off with.
Yeah, well, I think there's a significant interest, but I think also it's I think the sort of the strong push for the greener ships, although it's there, I think it's still more at the top of the organizations than it's actually going all the way down to the KPIs of the charterers. So, but I think it's coming, and I think again people will watch and see, and we've seen quite a bit of interest in our ships now. So, but obviously we the first ones we're gonna run ourselves, and we've decided that, and then we'll see after that. But yes, there's a significant interest.
Yeah, we're running a bit short on time, but just to end with the equity valuation part, which I think is quite interesting. You've been in a segment where earnings have actually been quite strong during this year, but it's been a recurring theme for some time in this space that investors aren't really willing to pay up in terms of the steel value and NAV here. So I'd just like to take your views on, and we can go around with a short answer on each. What thoughts do you have about being a public company priced this way, and what could you do in terms of either capital allocation or other communication to do something with investor appetite for LPG? So if we can start with Jens.
I think it's a big question mark whether you should be public as a shipping company, and but from our point of view, I think we're in the right segment. If you look at the energy mix going forward, the LNG and the LPG is really the energy that will carry on for the longest, or be a major energy for a long time. So I think we're on the right side, but I guess to have the right pricing, we need to prove that we make money over time, and I think that is the biggest challenge, because the investors obviously question the long-term sustainability of the present market situation.
Yeah, Anders, if you'd like to continue.
Well, we are public. We will stay public. I think it's to me the focus is we need to highlight more the returns we're earning, rather than just to talk about net asset value. I think in shipping there's too many people focusing on that. We're in a market, we don't buy and sell ships all the time. So I think the returns are important, and I think and we're also we're sort of a small part of the shipping community. But I think we over time can earn good returns and show we're not going to fall in love with our ships, but be sensible. And I think over time hopefully we'll get paid.
Harry, a short comment.
Yeah,
Then jump to John.
I think we are where we are, so we're public as well, and obviously that gives us access to the public markets, which is helpful. I agree with everyone else. I think it's about discipline and making sure that you live up to the promises that you give to the investors and also to the markets, but maybe sometimes trying to be a bit more creative to get an edge so that you've got a differentiator compared to other people in the space.
Yeah, and last word on that, John.
Okay, the pricing of shipping stocks always been challenging in the markets. We all know that, and it's just because shipping is volatile. There's no earnings sustainability. You know, once you have earnings, then you don't have earnings. So it is very difficult. And because we know that the markets look at forward expectations, they value those shares at a certain discount as a result of the lack of earning sustainability. We hope that this market improves, and as LPG is concerned, it's a little bit less volatile than other markets. So, but to follow up on this discussion of earnings, when we do have earnings, what we do is we return it back to shareholders, either with a buyback program, or we can reduce our debt further. We could consider dividends, which is something that, you know, always there. And then we have to consider our using some of that money to renew or upgrade our fleet. So all these are tools that we have in our toolbox and want to use.
Yeah, super. Okay, I think we'll leave it at that. I think the positive side is that the discounts are hindering getting financing to new vessels and might even lead to some M&A activity, perhaps instead. So all of that could contribute to keeping earnings stable for longer. So we'll see. So thank you so much for the panel today.
Thank you.
Thank you to everybody for me too. It's been a great panel. Thank you.
Thank you.
Bye.